Hello, everyone, and welcome to another Cinder webinar. Today, we are talking about the top 15 awkward questions that you were afraid to ask your accountant. We're very excited about this one today. It should be a great time. We'll get started with those questions in about 2 or 3 minutes. But for now, we'd love to just get to know who's here. If you wouldn't mind putting in the chat where you are calling in from today, we'd love to know where you're joining us from. And just to let you know as well, we do have some questions that we will be going through, but of course, we always like to have that Q&A available for participants. So if you look at the bottom of your Zoom screen, you'll see there's a little conversation bubble with a question mark. That's our Q&A. You can put your questions in there. You can add your name, or you can be completely anonymous. If the question is super awkward, feel free to go ahead and leave it very anonymous, and we will get to that. So thanks so much for joining us today. We will get started in just a couple minutes. So yeah, if you can start putting those locations in the chat, that would be great. I will kick it off here. Joining from California. So, Hi, Helen. Nice to see you. We have Melinda from Boston. Welcome, welcome. Sometimes we get a very international group here, which is really nice. We've got New Jersey today. So we've got East and West Coast represented. Pennsylvania, awesome, welcome. Yeah, this is going to be a fun one. Usually we have more of a sort of scripted webinar, and today we are really diving in with these questions. So I'm excited to introduce our guests, Ellen and Michelle, in just one more minute here. I will give a formal introduction to them, but thank you both so much for joining us today. We're very excited to go through these questions with you. And we'll just give it just until 12:03 my time, 3:03 for those on the East Coast, and then we will dive right in. So the way it's going to work today is we have a randomizer that you will see pop up on your screen. It's going to spin, select one of our awkward questions. I'll read out the question, and then Ellen and Michelle will answer that question for us live here. And of course, any follow-up questions, like I said, we have Q&A available down at the bottom of your chat. So anything that comes to mind as we're discussing these questions today, please do ask. We love for these webinars to be very interactive and include our audience as much as possible. So let us know what questions you have. So since it is now 3 minutes after the hour, I'm going to go ahead and kick us off with some bios. So we have with us today Michelle Vilms and Ellen Allen. First, I'll start with Michelle's bio. Michelle has over 20 years of experience in financial management, in corporate and entrepreneurial settings, and has board experience with nonprofit civic organizations. She took on her first consulting client in 2008 and has since then worked with clients in a wide range of businesses. Michelle is a QuickBooks Advanced Certified Pro Advisor, earned her BS in accountancy from Long Island University and her MBA from Babson College. So thank you, Michelle, for being here. Welcome. And we also have with us today Ellen Allen, who is the owner of My Team Accounting. She provides client accounting and advisory services, as well as back office solutions to business owners looking to find more time to both run and grow their businesses. She's passionate about empowering her clients to make informed financial decisions from accurate accounting records and embraces technology for efficiency in business reporting. Ellen is a CPA and advanced certified in QuickBooks Online. So welcome, welcome. We are so excited to jump in today. So what do you say? Shall we start it?
I don't know, Ellen, I'm starting to feel like we're on Wheel of Fortune.
Yeah, or like
oh, it will feel that way.
I feel like the top quiz is coming, but I'm ready.
All right, we're ready. We're ready.
So let's bring up that randomizer.
Okay.
And let's get the first question up and running. So the randomizer should be popping up. Here we go. So what will it be? I know, I feel like we should have some Wheel of Fortune music going, right?
Yeah.
All right, the first question is, why do I have to get a W-9 from our vendors?
Oh, I'll start with this one.
All right. Yep.
So the IRS requires 1099s to be issued in several different cases. There are several different forms of 1099s. Business owners often will find the 1099 NEC, non-employee compensation, as the form that they're kind of on the hook for. Basically, the government, in effect, is saying if a business is going to take a deduction for services they're paying, they want to make sure someone is picking that up as income. They want it to balance out. And it's a business, I always characterize it as a business best practice to ask your vendors for W-9s, because the IRS does offer a few exceptions for not requiring a 1099 to be filed. One of those is to corporations, but you don't have any way to know if the business that you are getting services from is a corporation or not. A W-9 is really the pathway to being able to meet that IRS 1099 filing requirement. It gives you your vendor's legal business name, their address, their tax ID number, and it lets you know their business entity. So if you find out they're a corporation, you don't have to worry about it. But if they're self-employed, and you provide, in the case of an NEC, $600 or more, they provide to you, pardon me, $600 or more in services in a year, that's someone you're going to want to be prepared to issue a 1099 to. So just as best practice, get those W-9s every time you engage with a new vendor. What do you see, Michelle?
Oh, I was just going to add to that, like, it is the end of August. So if you haven't thought about this, now would be the time. Do not wait until November, December. They're due at the end of January. And so you
Great
can,
point.
there are many ways that you can review your files to find out who you haven't collected from and what potentially you'll have to send out at the end of the year. You do not want to make this a last minute adventure, if you will. And so take a look at it and then build it into your bookkeeping practice where you ask at the end of every month or when you're going to pay somebody, just get it. And you'll eliminate so much headaches at the end of the year.
Great. Awesome. All right. Well, that's not
Okay.
too awkward then, right? So let's see what the next question brings. I think we're ready to spin this wheel. So here we go. What will it be? Okay. It seems to me I paid double tax. How is it possible? Why are my taxes so high? It's a loaded question here.
All right. I think I have the answer. So I think this speaks to, are you using your financial management software correctly? And are you following the processes? And so the example that comes to mind for me is if you are issuing invoices to your customers and then you take payments from them, you have to be cautious that if those payments are coming into your bank, like as ACH or they're, automatic deposit, that you're in fact posting them against the invoice and not just depositing again as revenue. So you want to be careful that what in fact is revenue is getting recorded as revenue. But if something's just a payment for something you issued an invoice for, you may want to make sure they're getting matched and not duplicate entry.
It's about following the workflow of your particular software. Another example right in line with what you're offering, Michelle, is if you think about e-commerce and businesses using Cinder. It's great because it's automating that whole process and getting that information in your accounting software in detail. But if you're still like trying to post your deposits and your sales manually, perhaps because that's all you've ever known, you're going to have that doubling up of income like Michelle was talking about. So it's about process and an e-commerce app like Cinder leveraging that automation.
And I would just say, if that made anyone, that was a pretty loaded question. So if that is of concern to you right at this moment, the way that those things get caught is when you have good bookkeeping and you're reconciling at the end of every month, and the duplicates are found in the moment. So good books and good practices help uncover those. So if you're concerned about that, that is one of the first steps, is to make sure your books are up to date and that you're reviewing those, because that stuff falls out on purpose.
Makes sense. Great. Thank you so much. So let's see what we get when we roll the dice again here and pull up another one of these
2
questions.
down, Michelle.
I'm like, okay, let's see what's gonna happen. That was a hard one, because I was like, what are they trying to get at? Okay.
So the wheel is turning as we select our next question.
And definitely, if anybody sees that that's not a full answer that you wanted, please put it in the chat. Or
Yeah. Oh,
whatever.
yeah.
Yeah.
Let us
Please let us
know.
know, and we'll try.
So this next question, shall I always keep my information up to date? I have a feeling I know the answer to this one, but I will turn it over to you, Michelle and
I'll take
Ellen.
another easy one.
Oh, you go. Go.
Okay, yes. Yes.
Yes.
If you think about the financial information, you know, the bank accounts you have connected, your credit cards, all of those, keeping that posted through your bank feed, I mean, I consider that up to date and accurate. And yes, that's really important because it allows you to be working with real-time, up-to-date information. And that's what's needed to help run your business, to make decisions, to help estimate if you need to make quarterly tax estimates, things like that. It's really hard to make good business decisions when you don't know where you stand financially. So yes.
Yes. Yes.
I would also add to that, one of the things that I like to do, we talked a little bit ago about W-9s and 1099 requirements, is, you know, we are approaching the end of the year, and I think it's always a good idea just to kind of reach out at year end and just send an email and ask, has anybody moved? Does anybody need to send me address updates? Because when you're taking the time to try to do things the right way and get your 1099s out, the last thing you want is for them to be sent to the wrong address. And then you go through a whole nother process trying to get them in the right hands. So up to date is good.
Yep.
Well,
Sounds
and
great.
when I heard that question, I was like, if you're not using your information to run your business, just think on that. Like that it's so vital. It gives you so much information. So your information always has to be up to date. And if you don't know how to use it to run your company, find somebody like us to help you, because it's so valuable.
Right. Makes sense. Let's spin the wheel again and see what our next question is.
I see how those people feel on TV. You're like, what's gonna stop on it?
Yep. Let's see.
Okay.
Why is my profit margin lower than expected?
Well, so many reasons. I can take a stab at it.
Okay.
So let's start with what we think profit margin is, right? And so, and just for the audience, maybe they meant the whole bottom line, like revenue minus all the cost to get the revenue, minus all the other expenses, the net number, and maybe it's like $1,000, and you thought it was going to be $50,000. And so you have to understand what went into that number, and is there an expense, right? Because those are the biggest numbers that really isn't an expense. Like Ellen and I were talking about inventory the other day. And so inventory, you could have bought a bunch of inventory, but you didn't sell it yet. And so that inventory really goes on your balance sheet. It's not an expense that year. It's like you own it, you're gonna sell it, right? So that's a simple example. And then you would look for, did you prepay for something like a big item or something, or you bought a large piece of equipment to run your company and you just plunked it as an expense? But there's many rules in accounting that that's really not an expense, but you spent money, that's spending money, but your margin on your business could be a lot higher if things are miscategorized. Ellen, take it away.
I think kind of to just kind of go along with what you're saying is sometimes it can be timing. A lot of times it's timing. And I think part of that is perhaps recognizing if your business has some seasonal aspects to it. You could be incurring some expense to prepare for a busy season, and maybe you don't have the sales yet in place, but it's going, you're preparing for the future. And if you're a cash basis taxpayer and you've incurred expenses, setting the whole inventory discussion aside, because Michelle makes great points about making sure you're accounting for your inventory correctly. But if you're incurring a lot of expense and this is not your busy season, yeah, that profit margin is going to be out of whack if you look at that particular month. And in that case, I'd suggest, keeping in mind the seasonality, keeping in mind the nature of what you tried to in the past reporting period, and then analyze that net profit on a larger scale. Look at the past quarter or the year to date and see if then perhaps it fits more in line with what you were expecting.
Great.
Yep, I like that.
All right, let's move on and spin the wheel again. And just to remind everybody, you can feel free to post those questions in the Q&A, and we will get to those after our questions on the wheel. I do see we have one already in there that we will get to, and so anyone else who has a question, feel free to post it. So we'll just, while we're waiting for the next question to pop up here.
This wheel is going to spin.
Yep. Yeah.
Let's see.
Mm.
Having a little bit of difficulty with the wheel, maybe.
No, I see. Do you see it?
Oh, mine's not spinning, no.
I don't see spinning either, but
I can read it. It says, what to do if I'm based in one state, but sell and hire people in different states and countries.
well, I'll jump in first. Kudos to you for recognizing that that could be an issue. Definitely, if you're hiring in other states, you'd need to make sure you're registered properly so that you can be withholding payroll tax for your employees and paying the payroll taxes that you owe. When you start talking about selling potentially in other states, you're really driving at the concept of nexus and am I going to be required to pay taxes there? And that is just a really important thing to be aware of. There's lots of tools out there that can help you navigate and measure if you have nexus in a certain state. Nexus is, it kind of comes down to, do I have a presence in this state or this, I guess mostly we're talking about states, aren't we? But do I have a significant enough presence there that I'm going to be required to pay taxes? And the crazy thing is every state has a different idea of what that means.
Yes. And I think remote working has made the concept stronger because I feel like it added this third category. So you've got, there's economic, like, or do you have sales in your base? Like I'm based in Massachusetts. So, but if I was selling a lot in California, based on the laws of that state, we may have nexus there because we have a strong business presence. If I hired one person in California, now I have to register in California because I have to collect federal withholding tax. And then, if you have, maybe you don't think you have a presence, but you have a little sales officer, or you have hired people who are selling in those states. So just think about there's three. What we want you to take away from this webinar is that to be mindful of it. And I in my firm, I don't handle taxes. Ellen, you handle taxes? No. And so, we've seen the tax people, a lot of times your tax person will say, could you send me sales by state? They're actually like checking up on you and just making sure you're doing okay. So if you have a significant spike in sales during your growth, you should just be mindful of that. But generally we're seeing tax people are asking for sales by state, or when they're looking at your people, what states are they in? They're trying to get ahead of it, but you are really responsible for it.
Great.
Yeah.
Makes a lot of sense. All right, let's go ahead and spin the wheel again. Hopefully this time I'll be able to see it.
I kind of wish it would shrink each time. Is it shrinking? No.
Oh,
It's
and I
not
don't
how
see
many
it.
are left. I don't know.
Oh, spinning for me this time.
Yeah,
Okay.
it's spinning slowly for me, so hopefully this
Okay.
time I think. Okay, why is my account receivable so high? Which one of you would like to take this one?
This is my favorite one, but I'm not going to get all of the reasons. All right, I'll try. So it it starts with like, is that the right number that people owe you? So if your answer is yes, then I think you have to think about what your billing process is. Like, are you billing and then you're not reminding people and you're not collecting on time? And so you have to analyze the process. And then what are the reasons that people aren't paying you and that it's so high? Are your terms too long? I have a belief that if you are in a service business, 30 days to collect your bill is too long because you have to pay payroll. So I just think it should be shorter. How can your customers pay you? Do they have to pay you on a check because you don't take electronic payments? Then I don't know. They're gonna shove it aside. They gotta go find their checkbook. They gotta find a stamp. Like
Yes.
what's holding up the process? So I think it starts with that. Like, is that the right number on your balance sheet? And if it is, do you have a good process to remind people? People want to pay you. But if you're not sending them out timely and your bills are late and then they're late, it just compounds your cash flow. Kellen, what are you seeing?
Um, I would just expand a little bit because I think your answer was great. If let's say you're a business and you've had sales the beginning of the month, large number, and you have an accounts receivable clerk who's going to help you send out get those invoices into your system, I guess I should say. So right now, as he or she prepares them, those invoices are in your accounts receivable amount, your balance. But let's say you have a process like you don't want any invoices to go out till you've had a chance to review them because you're the business owner and you're like very, very close to this, let's say. So, maybe that's the end of the month because you've been really busy. So then you send them out. And as Michelle said before, if you don't have a modern, easy, efficient solution, easy way for those customers to pay, like clicking on a link in that invoice, yeah, they're going to set it aside. They got to go find their checkbook, or it's a big company. They got to run it through their accounts payable. It could be getting to the middle of the end of the next month before you've even have any chance of getting paid. So you've got a sale at the beginning of the 1 month, but because of a very long drawn out process internally, and then an inefficient, not real user friendly way to request payments from your customers, you could be closing in on a month and a half, 2 months from the time of that sale before you're going to get paid. And that's just a process that really needs looked at. And in my opinion,
Yeah, I think it's one of the most important processes of
Mhm.
how you build people. Don't be afraid to build people depending on your business. And many people have said to us, you don't understand, we can't do it that way. And my answer is, what if you tried? So what if you tried billing in the middle of the month because you do your services all month and that's sort of meeting people in the middle and you get paid within the month you're doing the services? What if you could bill it at the front of the month? What if you could bill weekly? Like, what is your timeliness of getting that out? But it really is the process. If you're not looking at that summary and what are your terms as the business owner of more than 2 invoices outstanding from a client or customer? Like, what are your rules? What are you going to go by that you could delegate to your team that must be collected, or when would you cut off services? You really got to take a hard look at the whole process, and it'll really improve your cash flow and improve that number.
Makes sense. Thank you. All right, let's spin the wheel again and see what we land on. I think we definitely, if we do this again, we need some kind of music for the wheel.
Yeah. Suspense.
Yeah, here we go. And the question, why don't I have any money? Oh, wow. This one. Talk about a loaded question. Which one
Well,
of you?
Go back to the last answer first. So
yeah,
And then go ahead.
Oh, no, I was gonna say, yes, absolutely. That's where you start. I mean, we kind of covered a lot of that, but some other things to throw out there to consider is, you know, are you taking deposits on services? Are you considering, can people pay in installments? That's an option. Not to go real negative, but what's the consequence if someone doesn't pay on time? Do you have late payment fees that you're actually gonna assess? I think Michelle said on the last question, I think she talked about reminders. Make sure you've got a good system in place. Automate that so that you're leveraging some efficiency and those reminders are going out at regular intervals. Now, be really careful that you're keeping that information up to date and accurate, because people don't like it if you send them a late notice and they've already paid. So get into that bank feed in your accounting system. Make sure everything's posted up to date and accurate, and then look at your accounts receivable and see perhaps who needs some reminders.
So, so I would add to that, and we'll, I guess, maybe turn to payables. And are you paying people too early? Do they have terms on you on their accounts payable that you owe your telephone bill, or you just bought a bunch of inventory and you owe on that, and you're like, oh, I just want to pay that. So, okay, well, then that is going to chew up your cash that you haven't received yet. So you have to look at those things in tandem, to make good business decisions. Or if the terms are too hard that you're like you bought inventory, but you're selling it in the future, like maybe you can get extended terms and you talk to your vendors, you're a good customer, and can you get those terms to be a little bit later so that the cash flow is more in line with what you want to pay? Or, do you have a certain credit card that you can, you're putting it on the credit card, but you can pay 1 month later, right? Because you're not incurring interest. And so there's ways that your balance
Great idea.
is really important and so like Ellen and I both said at the very beginning, your numbers help you. And all these really detailed questions, that balance sheet's really going to help you make some of these decisions on where you should look to improve your process that's happening in your company.
Great. All right. And as we're pulling up the next question here, I just want to go ahead and remind the audience again, we will have at the end here a time for Q&A. It looks like we have a couple of questions that have come in, and we are looking forward to answering those. So it's not too late. If you have something you would like
Send them
to
in. We'll
please
give
do
it a
now.
whirl. Ha 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 ha.
All right. Our next question is, how can I shorten the time it takes for my clients to pay me? Which
It's
we
all
kind of
about the
listed a
money,
little
isn't
bit.
it?
Yeah.
Right.
Make it easy. Send those payment links in your invoice, I would say.
Yeah.
Credit card payments.
I mean, my example would be my electrician, who I adore. He sent me a QuickBooks invoice, but it didn't have a payment link. And I saw it on my phone and I forgot about it for a couple weeks. And I really wanted to pay him, but I didn't know where my checkbook was. And so I was like, oh, I have to call him and tell him he should do merchant services and attach it and like help people. People want to pay, right? And so think about that for your customer base and your industry. How are people able to pay you? And is it easy for them
Yes.
to get it to you right away? So
Yes.
really what it comes down to.
Make it easy.
Great. All right, let's keep on moving through these questions here. We will spin the wheel. We can see as the questions disappear, the wheel is getting less populated here, but we still have quite a few to go through. So what we've got here is, well, we actually did this one already, so we will spin it one more time. And what will it be? Let's see. Why is my business always running out of cash even when sales are strong?
I'll take a stab at it. There's a lot of crossover and a lot of the questions, I think, and the answers Michelle and I are offering. You want to be looking both at the sales side and the expense side. So if we start with expenses, it's about controlling those expenses, watching your overhead. Accounts payable management, as Michelle suggested, make sure you're taking advantage of the terms that the suppliers, vendors are offering you. Send out your invoices quickly. It's about management and process, but ultimately, if you have your information up to date and you feel that you've looked at all those things and you're having problems, maybe then you're starting to move into the area of, okay, maybe I need to be looking, maybe I've got a cash flow crunch here. Maybe it's seasonal, right? But cash flow projection can help you really lining out, when am I going to receive that money? When are these bills due? So those are my thoughts. First
I
step.
think those are great thoughts. I think, yeah, and that's where after you learn how to use the first two statements, the biggest statement is projecting cash flow, and all those pieces help you to do that. The ins and the outs of cash are different than the sales in and the expenses out. And so as you think about that, if you're still feeling short, you have to think about the other things. So if you're an LLC business owner and you're taking money out of the business that it can't afford because it needs to do all those other things, you need to be mindful of that. And if you're unsure on when you can pay yourself, that's a discussion with understanding this cash in, cash out, and what's extra. And you may have to reinvest some of that cash before you can take some out. So it's very complex. But if I think just in the short answer, like Ellen said, if you're just feeling like I never have any money, are you buying inventory too early? Are you, is your, do you pay people every week? Are you feeling that? Like you're still gonna owe those people, but like, how is it all structured is very important to the timing. And I think it all circles back to if you're in a business that you send invoices, your AR process needs to be super tight and super in your favor. Otherwise, all of this feels short every time. Payroll happens at a certain time, bills have to be paid on a certain time. You're gonna feel short all the time if you are not on your AR.
Michelle, I liked your point about considering whether or not some of the cash outlay in the business is really personal. Because even if you're coding it correctly, depending on the type of the entity, let's just say you're coding it as owner draw for discussion's sake. You're coding or you're recording it correctly in your accounting software, but it does still affect your cash. I've helped people at different times kind of going back over past 12 months and really looking to see like, well, how much am I running personal expenses through the business? And really getting a handle on that and just taking a chunk out as a draw on regular intervals. And then what you're doing is you're allowing the business cash flow to kind of stand on its own. And you're maybe managing, maybe it's a personal cash flow issue and not really a business one by moving that money into a personal account, which you should not be doing your personal in the business anyway, but you're dealing with the cash flow issues personally and not mixing up what's really a business cash flow issue. Hopefully I said that well
No,
enough.
that is a great way to think about it. Especially, I think we both see it a lot with single business owners. They
Yep.
forget that it's me, myself, and I, and all of it should be separate. No commingling. Use a separate
Mhm.
card. Just like move it over here, spend it. Move it back there, spend it. But don't let it get in the middle because it clouds the reasons why you're
Yes.
always cash.
Mhm.
So yeah, I absolutely agree with that.
Makes a lot of sense. Okay. Let's continue on with our wheel of questions. Looks like we just have
It
a
is
few left.
shrinking, isn't it?
It's shrinking. It
Yeah.
didn't feel like it was shrinking before, but okay.
All right. Let's see. What will we get? I can kind of see the beginning of this one so far. Yep. My books are a mess. Can I just start from here or do I need to go back and fix them? Which one of you wants to take on this?
I vote you go back and fix them. You have to fix them because the balance sheet is from forever. And so my example of the balance sheet of your new business owners is the day that you opened your business, you opened a checking account for $50 and that became equity in your company. And that's where you started. And from that day forward, in order for it to balance, it goes back and forth. The balance sheet is from forever and it has all that history. And so all those balances there need to be correct. And there's long ways and short ways of fixing that, but they need to be right in order for you to make decisions and move forward with a really good file.
That balance sheet, I would add, it's a picture of an accumulation of all your business activities since you deposited that $50, right? You've bought assets. Assets are on a balance sheet. You've earned money, I hope, but sometimes it happens. There's years you lose money. That's all wrapped up in the balance sheet. It shows you maybe what you owe in liabilities. It is a picture of your business, and if it isn't up to date and accurate, that picture is inaccurate. And there are ways to get you to where you need to be with a current balance sheet. A QBO cleanup, QBO rescue project. I kind of like that terminology better. It's a little more positive. But yeah, a good accountant can help you with that. They're one of my favorite things to do because at the end of the day, you just feel really good about getting somebody on the right path moving forward. But having that continuity in one place and having a set of books. I mean, a balance sheet is part of a business's financial records, and knowing that you have that as a business owner should give you a great sense of comfort, satisfaction, that if you ever needed to go to the bank and get a loan, you'd have what the bank was looking for. They're going to want to see a balance sheet and other information, but it would be to your benefit to have that up to date and accurate.
Makes a lot of sense. And I like what you both said. Just, if this is your question and your books are a mess, don't be afraid to ask for help. Get somebody to help you with it. Can be incredibly overwhelming to try to do this yourself. You shouldn't do that. So yeah, reach out. And on that note, as we are getting the next question up and ready to go, if you both, Michelle and Ellen, would put your information in the chat, so if people do want to reach out to you, they can get in touch with you. That would be great. Whichever way, if you have just a website or email address, however you would like attendees to find you, and we will get to the next question
All right.
here. Let's see, it's spinning now.
I'm not sure. Can I do that? Yeah.
Just change it to every, yeah.
Got it.
No.
No, that's not the right button.
Okay, so we kind of touched on this, but why do they keep asking me about the balance sheet?
Wait a minute.
Well, how about we try this? So whoever has a financial statement, if you haven't run your balance sheet, run it for a point in time. Run it for today. Go just pick balance sheet and run it. And look at that balance sheet and circle every number that you don't understand. And that will tell you how far off it is. So do you have that much money in the bank? Do that many people owe you? Does the number in inventory represent what you look at in your garage or your inventory place that you keep at a warehouse? Like, just look at it logically and don't be afraid by the numbers. Just say, do I know what should be in that number? Does someone owe you? Do you owe someone? Right? So ask those questions. Don't be afraid of it. Just print it out. That is the most important sheet you can have. If you don't understand it, get someone to help you fix it. And you will feel so much better that, yes, you can run your company understanding the financial statements.
I don't think I can add anything to that. I mean, it's a perfect.
So passionate about it.
Yeah, I am too, because it's business owners enjoy the profit and loss because you want to know what you made. You want to know where your money's going, all those expenses. And absolutely, that's a statement a business owner should be looking at. But don't neglect our balance sheet, because accountants love the balance sheet. And if it says you have a certain amount in accounts receivable, you should have an accounts receivable detail report that backs that up. Same thing for accounts payable. You should know what is in that number on your balance sheet and have the detail to back it up. And then you're going to be getting closer to the point where the business isn't running you. You understand the business better, and you're going to be able to make some good decisions.
Makes sense. Amazing. I think we have one more question from our wheel, and then it looks like we do have some audience questions. It is not too late. If you want to add those questions in on the Q&A at the bottom of your Zoom screen, please feel free to do so. You can actually do them anonymously or have your name attached to it, whatever you are most comfortable with. So let's see what this final question, I don't know if the wheel is going to spin or if it'll just pop up here. Oh, it will spin. Let's see what it pops up with here for this final question. Why do I have to pay sales tax?
It's not a and on. Well, we'll end where we began, because it's required by the state. And so if you don't understand that and you're in a particular state or what you should collect sales tax on, all states are different and there are various rules. Like in Massachusetts, we have like a crazy rule. There's no tax on clothes except if it's over $175 per piece, because that's a luxury item. Crazy. But what we want you to understand is you are a pass-through person collecting it from the customers and paying it to the state. It's their money. That's the most important thing for you to know. So if you're not understanding that on why you have to pay it, it is your obligation to collect it. And if you don't collect it, the state will want you to pay what you forgot to collect.
Oh, yes, yes.
Go ahead, Ellen. I
you're
know
going-
you got a lot on this.
you're going to be liable for it. Much better to be collecting it from the people that owe it. Like Michelle said, you're a pass-through entity. You are not paying the sales tax on your sales. It's the customer on those particular sales that particular state has said are taxable sales. So when you get that money in a sales transaction, a lot of business owners record all of that as sales. And that's not true, because a portion of it was the tax you collected. That really is a liability on your balance sheet. It is an amount that you've collected. You're just the pass-through agent, and then you have the responsibility of sending that into the state. So know what your state's requirements are. Consider, we talked earlier about Nexus, and perhaps you have some requirements for out-of-state sales. Consider that, but always keep in mind when that money comes in, you didn't have a great month in sales. You maybe just have a little bit extra you've collected in sales tax that is a liability ultimately for you to send in to the taxing authority.
Awesome. Well, that is all for our wheel, but we do have a couple of questions that have come in from the audience. So please feel free to add questions as we're still going here. The first question that we've received is, why is my inventory not turning over quickly?
So I think that's like, one, how do you know that? Right? So how do you know that? And is it, can you get a detail by item to see what products aren't moving? And did you guess poorly? Right? Did you guess that was going to sell and it didn't? And that might be a high value item versus a low value item. So I think the devil's in the details on this one, to really dig in by product or by business line or some further down, to really get a sense of why maybe you have really old inventory that you don't even have anymore, and it should have been taken off the balance sheet a long time ago. So that's like another one. Ellen?
I would agree with you. It's all in the details and the nature of what you sell. If it's seasonal, again, I'm back to seasonal, but if it's seasonal and it's July and you've got a bunch of Christmas inventory left or any holiday, you're going to struggle to get that off the balance sheet until the next season comes around. Maybe it's fashion, clothing, and it's not in style anymore. Maybe you're in fast fashion. It's about knowing what that inventory is and understanding your market well enough to know, does it need marked down? Lots of all kinds of sales and marketing things, but Michelle has, for accountants, probably where you would start. Like, is this inventory actually real, or are there some errors in that number on your balance sheet? I would start there.
Right.
All
And was it
right.
valued correctly like that? How did it get
Mhm.
there?
Mhm.
So I would dig into it.
All right. We have one more audience question right now. How do I know if my QuickBooks setup is correct?
We're sort of hammering it to death here, but I'd say take a look at your balance sheet.
I
If
was
you
gonna
have, okay, good. That makes me feel.
I was waiting, like, do we say
Do we
it?
dare talk about the balance sheet again? But for example, if your accounts receivable is negative, ooh, that it's not supposed to be negative. An accounts receivable is a positive number up in the assets at the top kind of your balance sheet. That would be a clue. Kind of similar but reverse over on the profit and loss statement. Sales should be a positive number. It's can't really be negative except maybe a very few isolated instances. You don't want to see negative sales. If your sales are negative, ooh, something's wrong in your process there. Those are a couple of big examples to begin looking at.
Okay.
Yeah, the other one I would say is, so the reporting, so whenever you put something into a database, right, which is the financial system, and you want to know how to pull things out. And so if you're not looking at the reporting that's available, though, that's generally where you can find things. So the balance sheet is from forever. So if you just ran it from today, it's going to have all the stuff you need, right? But if you ran a profit and loss and ran it by month, you might see inconsistencies per month. If you're not a seasonal business and that doesn't make sense to you, maybe things are getting recorded wrong, or like, who knows? If your books are not reconciled, and if you
Yes.
verified the outside statements according to how the system wants you to do it, then you cannot be sure that your information is doubled, missing, there's gaps in the data, you just don't know. And so those tools are there to help you. And so we all do this with every kind of software and everything we buy. We don't read the instructions and we jump right in. If that's you, step back and say, how can you go deeper on this software? Do I understand it? And are you using the tools that are there for bells and whistles for you to catch those things? And it really does start with the balance sheet. And we need a big sign. It starts with the balance sheet. But it
Very
also,
close.
right. And the close second is, are you at the end of the month verifying it to everything that should be in there? And then when you do that, all the exceptions pop out because you've gotten rid of the noise.
Mhm.
So give it more weight than maybe you have, and have somebody check it. If you're using a tax person, they're probably you have a relationship with them. They could just say, yeah, your file's a mess. They will be able to say that, or they might not be able to help you fix it because that's not their role. But talk to them and get the advice that you need so that you can make really good decisions, because knowing your numbers is 100% the best way to run your business.
Thank you. Yes, that's great.
Great.
And we did get one more question that just came in. So someone's asking, I use automation in my books. How can I know I didn't miss 3 days of data? Like, how do you know everything's correct?
Using the bank reconciliation function in your software.
Yes. Yes. It comes down to the reconciliation again, doesn't it? And I will say, I mean, I have seen this happen. Accounting platforms integrate with banks. It's great. Automation is efficient. Everybody should be trying to use that in their business, in my opinion. With that being said, banks are constantly updating their security, their platform changes. All of a sudden, the connection with your bank feed breaks. And seen instances where when the accounting software catches up with the bank's import, there can be a gap. And you know what? The only time you see that is when you reconcile to the bank statement, because then you find, oh, I'm missing 3 days or 3 weeks or whatever your particular nightmare scenario might be. But just stay on top of it. Try to log in to your different platforms on a regular basis so that you can verify that everything is in sync. It isn't something that can't be fixed, but sometimes you don't know there was even a problem until you get around to reconciling.
Yeah, so and automation is great, and you should absolutely do it, and you should trust it, but you need to verify it. And so all of
Mhm.
those tools are there. They are there for a reason. They're very important, and the consistency of it will make it not such a daunting task. When you're doing it at the year end and you find 12 months worth of problems, that is not really when you want to find it, right?
Mhm.
And so just give it a good look, see what's going on in your file, ask for help. There's plenty of tools out there. There's people like us. There's, you know, YouTube videos. But I would, if you have a tax accountant, you should just ask them how they see your books, what you could improve. Because not all of it's related to filing your taxes. Some of it's really just related to running your business.
Some of it's just for you.
Yeah,
Mhm.
just for peace of mind, you know. So yeah, the balance sheet.
Awesome. Well, it looks like that was the end of our questions that have come in. I just want to take a minute to thank you both, Michelle and Ellen, for being here today, for answering all of these questions. We put you both in the hot seat, but I think our audience got some great answers, and hopefully are going away with some to-dos and things that they can implement in their business. Thank you to all the attendees who have shown up here today, either live or watching the recording afterward. Just want to remind you, we've got other webinars coming up here at Cinder, and we'd love for you to register and attend. So we're very excited for what's to come. Thanks again to you both. It was great to have you, and looks like people are saying in the chat that it was great, made some to-do lists, so that's awesome. That's what we like to see. So
Great.
thank you all, and we will see you next time. Bye for now.
Thanks.
It's just,
Bye.
All
Thank you,
right,
Michelle. Bye.
bye. Have a great day.